Factor investing continues to grow in popularity and has historically shown outperformance potential against broad benchmarks like the S&P 500. While factor risk premia are well-established tools for altering risk and return, knowing which factor is best suited for a particular point in time can be challenging. For years, institutional investors have used complicated models to identify and capitalize on factors like growth and momentum. Today, innovations in indexing are democratizing access to factor investing, providing simple, rules-based blueprints for building dynamic factor strategies. We designed the S&P 500 Factor Rotator Daily RC2 7% Index to track the S&P 500 Factor Rotator Index and added a dynamic risk control framework using a mix of the S&P 2-year U.S. Treasury Note Futures Index and cash to help manage volatility. Let's take a look inside the index and see how it works. The underlying S&P 500 Factor Rotator Index tracks 5 S&P 500 factor indices: Quality, Enhanced Value, Momentum, Low Volatility, and High Dividend. It calculates the historic risk-adjusted momentum for each of the 5 factor indices based on short, medium, and long-term return horizons. The 2 factor indices with the highest composite scores at that point in time are selected. The Weighted Return Index uses a 75-25 weighting scheme, allocating 3/4 to the highest ranking factor and the remaining quarter to the next highest factor. Calculations are tracked daily and rebalanced monthly to ensure targeting is aligned with market movements. S&P DJI's Risk Control 2.0 framework, better known as RC2, is applied with a capped volatility target of 7%. As market conditions change, the RC2 framework dynamically adjusts between its underlying index mix of equity factors, U.S. Treasuries, and cash. When volatility goes up, the S&P 2-year U.S. Treasury Note Futures Index weight increases. In more extreme volatility scenarios, the index is designed to increase its weight to cash instead of treasuries to maintain its volatility target. When volatility goes down, the S&P 500 Factor Rotator Index weight increases up to 150% to capitalize on potential index outperformance. All of these adjustments are built into the rules of the index to help limit downside risk without compromising potential gains. So what's the end result of this dynamic approach to factor rotation? Targeted allocation to factors that have historically outperformed the S&P 500 over the long term. Dynamic rebalancing to increase potential upside, downside protection, and a higher Sharpe ratio relative to the S&P 500 historically, and a consistent risk level thanks to S&P DJI's RC2 framework. To learn more about the S&P 500 Factor Rotator Daily RC2 7% Index, visit www.spglobal.com/SPDJI.